Good day, everyone, and welcome to another episode of Friars Financial Forum. Today, our three big topics: a runway of optimism, AI and healthcare. We'll focus on healthcare today, and navigating financial uncertainty. This is kind of picking up on the fact that first it was the government employees who were battling unknown things going on with their jobs, and now it's kind of AI has taken over, and a lot of people are worried about their jobs. So we'll talk about how to navigate that financial uncertainty, and we'll get started with markets in motion. All right. So for this week, markets in motion. It was a short week because right after Memorial Day, so just 4 days, but we had strong momentum across the markets. So we gained some optimism because there was at least some conversation about a Middle East peace deal. But that was last week. This week, I think Tehran is not even talking to us again. So we got that. But let's see what happened with the markets here. So in our major indices, the S&P 500 was up 1.43%. NASDAQ was up 2.39%. The Dow was up zero point 0.9 and overseas was up 0.99. So everybody was up this week. Kind of seeing the chart there. Early week, it was the leadership from the chip makers that got us going. And of course, as always, tech continued to rally. Again, White House claim we're making some diplomatic progress in these um, talks, and that got people's risk appetite up a little bit. So people are jumping in the market. Midweek shift, we had the falling oil prices help the Dow go up a little bit more to a record close. So those are the things that are helping. Thursday, we got some upbeat economic data that also lifted the S&P. And then the week and month ended strong. So tech strength plus lower oil lifted the market, the lower oil prices. And all three major averages hit new intraday and closing records. And the Dow crossed 51,000 for the first time ever. So that was a major psychological milestone. Now it's 51,000, not $51,000, as according to our AG Pam Bondi, who obviously did not understand the stock market. All right, I'll turn it over to Jeffrey now. I digress.
I
Uh,
know that's right.
Turn it over to Jeffrey now for the economic rundown.
Yep. Just kind of give you a rundown of what's going on. Thursday delivered a full slate of April economic data. So we got some inflation numbers and PCE of personal consumption expenditures rose 0.4%, cooler than the 0.5% that was expected. Annual PCE is at 3.8%. And that kind of lets us know that it's a slightly softer inflation, and that's important for our markets. The GDP, Q1 revised down to 1.6% annualized, and that indicates a little bit slower than initially estimated economic momentum there. So we also got our durable goods orders surged up to 7.9%, and that doubled our expectations for what that was going to look like. Biggest increase in nearly a year. And that's driven by a 166% jump in civilian aircraft orders after Chinese ordered 200 planes. Then we kind of get into our housing stuff. New home sales fell 6.2% in April. But keep in mind, we're coming off of a strong February and March. That was 8.9% in February, 7.4% in March in gains. So just keep that in mind when we talk about the fall in April. And then, so overall, it's a kind of mix, but a lot of market-friendly data coming in this week. Softer inflation, strong manufacturing, and slow, and a little bit of slower growth than expected, but still some market-friendly data. So,
Yeah, good points there. Good points.
mhm.
Let's see what else we have. So the economic data that we'll get this week, on Monday, we got manufacturing and construction spending, auto sales. On Tuesday, we got job openings. Today, Wednesday, we'll get ADP private sector hiring and factory orders. Thursday, weekly jobless claims and productivity numbers come out. And finally, Friday, the federal employment report that'll be the headline event of this week, and
Okay.
consumer credit. But that federal employment report will be important for us. So a good mix of labor, manufacturing, and spending data that can all kind of shift the market one way or the other.
Yeah, yeah. And then we kind of get into our earnings this week. A little bit of a lighter earnings slate, but we still got some influential names coming out. On Monday we got Hewlett Packard Enterprise. Wednesday we got Broadcom, CrowdStrike, and Medtronic. And then we go into and then as we kind of look at that, tech and cybersecurity remain as the focal points, with Broadcom and CrowdStrike likely to draw the most attention from that Wednesday slate. That's all we have for the week. So, like I said, a light earnings slate, but still some influential names that'll tell us some information about the tech sector, especially. So,
Yep,
then,
absolutely. Yeah, yeah. The bulk of
hmm
everybody, reported early in the quarter, so now these are the end of quarter people coming in. So not a lot of
yeah,
names.
yeah, the
Awesome.
stragglers coming in.
Yeah. Yep. 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 All right. So that'll kind of wrap up Markets in Motion for this week, and we will be right back with Finance in Focus.
Okay. All right, welcome back. And now we're kind of leading to our finance and focus section. And to start us off, we'll kind of talk about the corporate and market movers. And with that being said, Dell is surging. Shares jump on blowout earnings and strong guidance, and that's powered by accelerating the AI server demand. Costco is showing a lot of strength. We all know about Costco, and so sales are rising as value focused customers flock to bulk and fuel offerings, and inflation pressures, mid inflation pressure. So a lot of people are going to Costco because with that Costco membership, you get a little bit of cheaper gas and you can get stuff in bulk that kind of helps kind of counteract some of that inflation pressure. Um, the gap weakens because full year sales outlook due to product mix challenges and slowing momentum at Old Navy. So a little bit of weaken from the gap, familiar name there too. Then we get into our central banks. The Fed cautions, and then Minneapolis Fed president says it's too early to determine whether hikes are needed, emphasizing the need to keep options open amid uncertain inflation dynamics. And then globally, within the U.S. and globally, credit stress is rising. Credit card delinquencies climb to their highest level since the global financial crisis, as households struggle with elevated rates and inflation. Savings erosion. U.S. savings rate falls to the lowest since 2022, reflecting mounting affordability pressures. The Eurozone inflation flare up. France and Spain see inflation accelerate the fastest pace since 2024. And then China warns the EU ahead of talks on potential export restrictions, signaling rising trade friction and potential escalation there as well. So a lot going on, and it kind of lead us into our Wealth Wisdom workshop today about fighting some
Mhm.
of that stuff. So,
Yeah, absolutely. Yeah. So that's interesting that even now that inflation is creeping into traditionally affordable places like France and Spain. Um,
hmm
that's interesting as well. All right, so our new segment, all the buzz in AI. What's the conversation this week? We're going to talk about healthcare a little bit. So our wearables, they're shifting from tracking to predicting. So AI is pushing wearables into truly early warning health systems. So rings and smartwatches are being used to or beginning, I'm sorry, to use continuous biometrics, sleep, respiration, blood oxygen to model long-term risk like hypertension or cardiac events. So why does that matter? Prevention becomes a new frontier of consumer health, raises regulatory questions though. When does a wellness device become a medical device, and expands the data moat for the major wearable platforms? There's also AI-driven cancer mapping hits clinical practices. So here, University of Michigan Health is using Unfold AI to build personalized 3D prostate cancer screenings. The impact here: more precise treatment planning, lower risk of over or under treating tumors, and the first major Midwest adoption of an FDA cleared AI oncology tool. So this is another step toward AI augmented diagnostics becoming standards of care. And finally, the doctor shortage meets its only scalable fix. Fortune highlights a looming clinical shortfall and argues AI may be the only realistic pressure valve. So the key here is AI isn't replacing doctors, it's replacing the paperwork that keeps doctors from practicing medicine. So we'll have automated charting, inbox triage, insurance documentation. So the upside here is more patient time, less burnout, and higher system throughput. So that's how AI is kind of transforming healthcare as we kind of see it in real time.
Yep.
And yep, so that wraps up Finance in Focus, and we will be right back with the Wealth Wisdom Workshop. Welcome back, everyone, to another Wealth Wisdom Workshop. Today's topic is one that hits home for a lot of people, as we were saying. First, it was the federal employees, IRS workers, what Department of Education. Oh gosh, what else got hit? Homeland Security, I think. I mean,
Yep.
just plethora of people. And
Hmm.
now AI is leading people down that same path with them worrying about their jobs. So today we're going to talk about spend a little bit of time about how you navigate this financial uncertainty.
Yep. And so the job market is shifting. I think that's the biggest takeaway. And hiring freezes are happening, and the economic climate feels, I guess, unpredictable to say the least. And if your industry is being greatly impacted by AI, you're probably feeling that uncertainty more than most if you're in one of those fields that Marcus was talking about. So,
Yeah. So we're going to walk through 4 steps of things that can help you feel informed, feel empowered, and prepared no matter what happens next for you.
mhm.
All right. So lead us off, Jeff.
Yeah. So step one, and then that's gather the data. So the first step in responding to uncertainty is simple, but it's not always easy. You got to gather the data. You can't make decisions if you don't know the full financial picture. So let's break it down. You got your income. You need to list every source of income. That's starting with your paycheck, leading in your spouse's or partner's paycheck if you have one, then your portfolio income, alimony or child support if you have that. So list every form of income coming in, list it all out. And make sure you're listing net income, not gross. You need to know what's actually hitting your bank account each month. So that's after taxes has been paid and the money you're actually receiving into your pocket. Um, and then flag any income that might be at risk. So any income that you're at risk of losing, flag that. And then we get into our expenses. And this part can feel a little bit uncomfortable at times, but it's crucial. Look at your bank and credit card statements the last 3 to 6 months. And listen, don't spiral into guilt or shame. You're not judging yourself. You're just gathering the information. Tools like your bank's annual spending summary or apps like Monarch Money can help you spot trends. Your goal is to understand your average monthly spending and just understand a full picture of what's coming in and out. And then we go into your assets. So simple, list what you own and group it by accessibility. One, your cash equivalent. So your checking, savings, and CDs, put those in a bucket. Then you have your investments accounts. Then we go into your Roth IRAs, and then we go into your pre-tax retirement accounts, which is generally a last resort because of penalty and taxes. So that's where you usually don't want to pull money from that. But we want to list out all those assets and see what we have. And then once you have this full picture, you're no longer operating in the dark. You're operating from clarity because you can see everything now.
Yep, absolutely. So now you've got that balance sheet and that cash flow statement there. So now that's where you can make adjustments. So next, we're going to make a contingency budget. So now that you know your numbers, it's time to build a bare bones budget. This is what we call your survival budget. This budget excludes discretionary spending. So take out vacations, dining out, subscriptions, entertainment. Instead, it includes only your essentials. So rent or mortgage, utilities, groceries, transportation, healthcare costs. Once you have your survival number, compare it to your liquid savings. So let's say your bare bones budget is $2,000, $3,000. We'll say three. So multiply that times 6 to get to 18. Once you've got 18, that gives you your runway. So now you've got a runway. If something were to happen, you can survive. So that's what we're
Mhm.
trying to do is survive. So if those numbers don't look right, don't panic. Just make sure you cut all non-essential expenses, sell any items you don't no longer need. So if you got an extra car in the driveway, if you're paying insurance on it, you don't drive, just get rid of that. And then maybe you can pick up some freelance or part-time work as well to help out. So those are a few things that you can do to shift your mindset from panic to preparation.
Hmm. Exactly. When you know your own way, you regain control at the end of the day. And that's what we're looking for here. So then we go into step three, and that's understanding your retirement options. So now let's talk about retirement. I know we've talked about that a lot in different podcast episodes, but we're going to dive right back into it because it's important. So when people feel scared, they sometimes make drastic decisions. But please hear this first. Do not take a full distribution from your retirement account out of fear. Um, that move can trigger a 10% penalty, income taxes, a lot of income taxes at times too, depending on how much it is. And then a major hit to your long-term retirement security too, which is still, we want to try to preserve that at the end of the day as well. When you know what your retirement will look like, you can plan with confidence instead of fear.
Yeah, absolutely. That's why it's so important to get that retirement income plan in place so you can make your
Hmm.
adjustments. So that's where an advisor comes in to help you with that retirement income strategy. And finally,
Yeah.
the big thing is plan for health insurance because if you lose that health insurance from your employer, where are you going to go to pick it up? So you've got a few options. You've got your continuation of benefits you may be eligible for. You can join a spouse's plan or partner's plan if their employer allows it. You've got Cobra coverage, so your coverage stays the same, but your out of pockets costs will increase. So you just got to understand those options to make sure we're keeping you healthy as well to get through this process. So, health insurance definitely is something you don't want to figure out under pressure. So that's something if you're in one of these industries to kind of start a plan for it.
Hmm. And exactly. Planning now is protect your peace later. So as we kind of wrap this up, taking these steps won't eliminate uncertainty at all, but it will give you structure, and that allows you some clarity and control. That's always the end goal. Whether you choose to navigate this on your own or with a professional, the key is to create a plan and then execute it. Your financial security is too important to leave just randomly up to chance. So that being said, thank you for joining us. You deserve to feel informed, empowered, and prepared, even in these uncertain times. And until next time, stay ready, stay proactive, and keep building your financial resilience.